Welcome everybody, I hope you can hear me okay, and what I'm going to do is just go through the markets today. This is the Dow, and what we get is the 15 minutes. So I'll just show you what I was looking at today. So we can see we had a pop up into 4 o'clock UK time and then just rolled over. So we caught that, we looked at the support there, we bought the support. Took it off, took it up before it got up there. I took it off at about 350. It actually went to 480 and then rolled over. And then I started to buy a small position down here, which I've since taken off for about 100 pips. So these 15-minute charts are nice for some day trading, and this is what I was doing yesterday. This is how I had my charts marked up yesterday. So again, we repeated the same thing yesterday. Pushed, bought the dip, bought the support, and then as we started to roll over, 385, 22,385 was my sell point, which was off the highs down here, and then just held it into this support. Okay, so it's something like a 15-minute chart. It depends on what you're looking for. If you're looking for just a day trade, you want to get in and out of these markets, then 15-minute charts are great. If you're looking for the bigger picture, then you need to scale up. The bigger the time frame, then the better the potential move. Now this is my 4-hour chart on the Dow. And this is what I was looking at yesterday. So if I take that off, you can see that we had a very nice chart pattern here. We were making lower high up here and making lower closes in the actual candles. So it stood to reason that we were potentially going to come down to that level. Let me just double check what that average is. That's a 50-day average down there. So 50-day average is a key one, a big one. When I started trading, technical trading, the 50-day moving average was known as the mother of all averages. And so that is at the moment holding true today. It doesn't always hold true, it's only a guide. We breached the 50-day average up here on the 5th of March and closed immediately lower. So that was really bearish. To close above a certain level and immediately close lower tells you that that was a rejection, and so the reduction of the trend, the rotation into the downtrend was clear from that point on the 5th of March. And so you can see we're down to 130, 125 here, so I took my trade off at resistance, and that is a sort of a higher close here in the 4-hour chart. So if we subsequently close lower just the hour before the close, we could see a drop much lower. Now I've been talking about lower moves this week. Ever since we punched higher up here, I've been talking about selling those highs, and so it's been a couple of nice trading days at the moment. If, like I said, if we close underneath this this level here is the Sunday Asian Open. That's why I had that level there before. If we close underneath that, at the moment we're bouncing off of it, close underneath that, and we could, who knows, come and see these lower levels and lower. Now, if we do break down, where could we come to? Now, I've been fibbing this area here. So, because this was a significant area here, we had a very decent drop on Friday the 13th. Now that took us to 18.2. So if we drop under here, we could be coming down to, well, at least back down to 18.2 and potentially down to these levels here, which is 15,140 and but the next level down on a break would be 16,866. Okay, and you can see in this move here, let me just draw this for you. You can see when we came down here, we had a push higher before we went on another journey to the downside. So that at the moment, here we have a push into that Friday close. The resistance has been sold into, and now we could start on our next leg, or we're already started on the next leg to the downside a couple of hours after the cash market opened today. Okay, so this virus is really sort of locking up the global economy. Well, it's locked up the global economy. The problem now is that the reason why we're getting a new leg to the downside is because the US is seeing an escalation in cases. So with I can't remember the statistic now, but a huge part of Americans in lockdown as well, like as with key parts of Europe, and it has been key parts of China, then that's ultimately having an effect on this market. But pure technicals, that is a great place to get short. Okay, so that's that. Let me have an update on gold, because I wanted to buy gold earlier today, but I didn't. I backed off. In previous declines in the indices, we've seen a huge decline in the gold. So this is potentially a 1, 2, potentially we are in wave 3. If that's the case, wave 3 is normally the harder drop. Now this, you can see from this fibs, we come right up into this upper zone at 1644, almost to the, literally to the pip, I think. So if we, like the indices, if this does not hold, then we've got next step is 1545, and could come all the way back down to this big breakout, easily come down to 1493, and if that doesn't hold, then could ultimately come all the way down here. This was a decent push higher, so this is a decision point here. The highs are still selling. So if we come down and don't hold that level there, then that is toast. That's had it, and we are looking for low levels. So why was I tempted to buy it? I was tempted to buy it because I saw some buying down here. We seem to be holding 1575. What will I do? If I'm going to buy this, I'd like to see a retest down here, down the 1517 level or 1550 level, and then a buy at a higher close down there. But at the moment that we're under this average, this 50-day average, so that does look lower. Okay. Let's go back to the Dow one second, because what I didn't do is look at the daily chart, which is something I should have done. So this is how I've got my daily chart marked up. Let me expand this. Now this red line here, this is 2019 lows. Anybody who is an Elliott fan will know that this is a 5-wave down move. 1, 2, 3, 4, 5. And we had a 1, 2, 3 wave correction. So there are 3 corrective waves into this 25,560, and we're just attempting to hold this area here. if this doesn't hold, I think we will, like I said, I think we will come down to 18,000. And if we then ultimately break 18,000, then, as I said, 16.5 and 15 look likely at this stage. So as we come into non-farm payroll on Friday, the Dow has got to hold this. Could come into that, maybe dip lower, but if it comes back and holds that, then that's bullish for a push back into 22.5 and back to 24, 25,000. But the path of least resistance is definitely down, and the 4-hour Elliott wave suggests this could be another leg that could get us right down to potentially 15,000. Okay, so that's why it's good. That's why I was talking about selling in the first part of the week. Let's just find out where we are on. Yeah, so we come right into that 50-day average. Like I said, I'm not a huge fan of moving averages, but they do have their uses. You know, if a lot of people look at them, then that's something that you need to have on your charts as well. We don't have to, but it's an indicator to me, not you know, a trade trigger. I don't take trades off moving averages. It's just I just use them as a basic outline indication. Okay, now oil. I've missed something here. I was trying to keep tabs on oil this week, and I'm too busy looking at the Dow, making money on the Dow. But this level down here, 2160. I was looking at 2160 yesterday, and it wouldn't do anything with it. But today we've had invents showing a big build up, but it doesn't matter. The market thinks this is a good price, so the market is buying that up. So I'll look at that closely tomorrow with the potential to buy a pullback in that. I tried to buy a pullback here yesterday and got stopped out. I think I bought that. Yeah, that's it. I was trading around this level here, and they took it under into the close or towards the close before they ramped it up. So they caught me out. And let's have a look at silver. Look at the daily chart on silver. Really struggling. This is the bounce on this one was pathetic compared with the gold, because this is industrial metal and the gold is treated as a currency, as a reserve. So this is, the fact we're failing at 1430 suggests we could easily come down to 1284 and potentially down to $1,000. Is that shortable? Yeah, sure. Already seen traders shorting at 1430. Here we're at 1390. So any highs at the moment are potentially to be shorted to see if we can get down to these levels. Not something I trade this infrequently. When this was coming into where was it now? Yeah, it was coming into this level here. You can see all these markings I've done here. Thought these were great before we broke up to 1967. Right, so yeah, I have been spending a lot of time on the Dow as usual, and it's terrific and nice and volatile. And here we are attempting to hold down here, and could be, who knows, could be trying to get back up to those highs. Good setup, or one reversal setup is 3 waves. So we've not, so that's significant. The fact that this last push down here didn't come and touch that third, didn't come to a third test of that trend line, could suggest there's momentum to the upside here. Yesterday interesting to note that we kept ticking up, but we ticked up to lower levels and eventually rolled over. And we're seeing some of that today. Decent tick up, a weaker tick up, so that could into the close roll over. Okay, so that was definitely on a gap strategy. That high was right in line with as an entry for a short. I didn't take it. I traded the upside and left it, walked away, and then once I came back to that, I realised the trade I missed. So that was lapse of me. Shouldn't do that. Okay. This is my 30-minute chart showing you all the resistance up there. We got this a few weeks back, or a couple of weeks back. We had a couple of shunts up. What was I thinking of? What did I think of here? I can't remember. Before ultimately that did a very nice dip. Markets love to push these things higher. Once you get a big move, and it loves to push it higher for several reasons. A, you get some profit taking down here, so closing short trades creates a bit of a bounce, but also the market loves to, it's all about volume, isn't it? And so the market was just taking a breather, popping back up before the next leg down, just taking a breather. So watch out for that in this market. So here we've got big down shove, another big down move, taking a breather, shorting, taking a bit of a breather. So we could still ultimately start dropping out of here so easily. So shorting highs is a good approach to this, to see if we can roll over into the close. Okay, if you want to come to up and running, if you want the regular briefings page, it's the latest entry in the briefing showing you what I was looking at. This is the alert room. This is a screen grab of the alert room from yesterday. And so this is just to prove to you what I was doing. So at 17:07 UK time, I was shorting the Dow at 385, and 17:22 I was posting potential targets for that. So come onto the briefings page and click this blue button here to get on the briefing list. In the meantime, keep an eye on that page. And here's the daily 60 seconds update and information on what we do in scalper trading